All right. A very good morning. Today is the 1st of August, midnight UTC. We are live streaming on Discord. This session is also recorded to upload on our YouTube and Rebel channels. So thank you for joining me. Today, we're going to do an introduction to DCA, or dollar cost averaging. All right. So join me every Friday, midnight UTC. We do these Verse community calls, and we share content related to the Verse and Bitcoin.com ecosystem and general tips and tricks to operate safely and securely in crypto. All right, so let's get into it. So this session is for new users in crypto who are new to trading regardless you're in DeFi or TradFi. You're new to trading. You don't have that trading experience. This session is for you. And if you want to level up your trading skills, do stay tuned to the end of the session. All right, because at the end of the session, you will be able to understand what a concept called dollar cost averaging is and how to apply it. All right, so the term dollar cost averaging, the technique dollar cost averaging can be applied both in DeFi and TradFi, so it's applicable across the board. All right, before we get started into the content, disclaimers as usual, this information is for educational purposes only. It is not financial advice. Do your own research and, of course, know your risk tolerance before investing. All right, let's get started. So, if you've been following along with the recent community calls, we've been talking a lot about technical analysis. So, we're talking about candlestick charts, we've been talking about moving averages. But the problem with technical analysis is that it requires skill and experience to identify the patterns and look at the charts, and this may not be beginner friendly at all. So you may get scared away with a lot of flashy charts and big numbers. So lots of folks don't get into technical analysis because of that reason. Technical analysis is also quite subjective, and sometimes you get conflicting signals if you look at different patterns. So if you ask analyst A what the market is doing, that analyst may rely on a certain set of signals, which may be totally different from analyst B, who is taking a look at different things in technical analysis. All right, so sometimes technical analysis can be subjective and you have conflicting signals. A third problem is that technical analysis also relies on timing. So sometimes when you identify a pattern or a signal, the price would have already moved. And how do you keep up with patterns and prices? You have to be constantly watching the screen all the time. So a lot of it is about not being able to time your entries or exits, and sometimes even experts struggle at this. And the last part about technical analysis is a lot of it is related to the emotions that you feel when you are trading. So sometimes if you're having a bad day, you're very fearful of the market, everything is red, that often leads to bad decisions. On a good day too, everything is green, that could lead to bad decisions too. So that's, you get a bit greedy, you take bigger trades that's higher than your risk level. So sometimes that emotional factor also affects how you trade, all right, and how you read the charts. So in comes dollar cost averaging, right? This concept called dollar cost averaging. It's a very simple, disciplined way to gain exposure to the asset that you want over time, right? Basically, you're buying at regular intervals regardless of the price. All right. So the gentleman that first, or one of the few gentlemen who first led this concept was Mr. Benjamin Graham. So he is considered the father of value investing. Right, he put out a publication called The Intelligent Investor way back in the day, encouraging investors to just invest small amounts regularly instead of trying to time the market. Like, time the market means buying the dips or selling the tops. So his approach was say, okay, we don't care what the market is doing. We just buy consistently over time, and eventually we'll get the returns back. All right, so that's the That's the concept that he led with, and many mutual funds to this day still practice this for their retirement and long-term portfolios. So it's a very easy way for everyday users to everyday investors to understand. So buying regularly over time, and that's what their selling point is, right? For these low risk and low cost funds. All right. So that's how it got started, and this is basically how it works. It's just two steps, right? So you pick an asset, or it could be Bitcoin, it could be any stock. So again, applicable to TradFi and DeFi. So pick an asset and buy regularly the same amount, or if you can afford a little bit more, of course, within your risk tolerance, buy more. Basically, buying at regular intervals, regardless of what the price is doing. So if it's up, you buy. If it's down, you buy. Keep buying over time, and that is the strategy. All right. So some of the benefits of this strategy. So when you're doing a DCA approach, a dollar cost averaging approach, you don't have to predict the perfect time to buy. All right. So as long as you have that amount and it's time to buy. Let's say you're buying every month or buying every week. As long as you have that amount, just simply buy regardless of what the price is doing. So there's no need to time your entry. All right, and it's also a very disciplined approach. So this strategy forces you to be consistent at investing, and it smooths out the volatility in the market. So whatever the price is doing, up or down, all right, it really doesn't matter as long as you are buying regularly. And it's also very beginner friendly, so it's easy to implement. All you need to do is set a date on your calendar to buy X amount, and yeah, just buy on the date. So you don't really care about what the news is or what the patterns are. Right? So just pick a stock, buy regularly over time. Right? So that's the strategy of DCA. Right? And DCA works best in volatile markets, for example, in crypto. So if you don't want to be stressed about, oh, is the market up today? Is it down today? Should I buy? Should I not? It takes all that decision making out of the equation. Right? So as long as you hit your date, just buy that amount that you have determined. Right? It's also very good for long-term investors who want to grow their wealth steadily. So all you're doing is to buy that crypto asset or the stock over time, and over the long term, your value will appreciate. So, for example, here in the Bitcoin chart, if you had regularly bought over time, you'll be enjoying a lot of value now at the all-time high. Right, and again, it removes the emotional and reactive side of things. So you don't have to really care about what the news is, what the US is doing, or what the price is today. Just buy over time. Very simple strategy. All right, so some key considerations. Again, DCA works best when you are considering the long-term horizon. So if you're in it for the long run, simply use the DCA method to increase your position in the market. All right. However, this may underperform if you compare lump sum investing. So if you know that it's in the pits of the price, you might as well do a lump sum and hope it increases, right? So that kind of approach will outperform DCA. And of course, discipline. If you are unable to set up a regular schedule or unable to allocate enough funds when you want to buy, that the DCA strategy falls apart, right? So it requires a lot of discipline to keep on buying at the regular intervals. Right, and the founder of Vanguard Fund, Mr. John Bogle, puts it very simply: time in the market beats timing the market. Right? So time in the market meaning the longer that you hold the asset, that definitely beats trying to know when you want to enter the market. Right? Time in the market beats time in the market. So very, very nice quote by him. Right, so DCA, very simple approach, but it requires a lot of discipline to execute. Right, so again, the key takeaways for this sharing is that when when you want a very simple approach to acquiring and um, getting value out of your asset, consider the dollar cost averaging approach, right? Buying regularly over time, right? All you need to do is to pick a asset. It could be crypto, it could be your stocks, doesn't matter. But if you do decide that you want this simple approach, simply do the dollar cost averaging. Takes a lot of decision making out of the equation. All right. Again, no one strategy can guarantee outcomes. So sometimes you need to combine with other signals for better accuracy. For example, looking at technicals or getting up to speed to technicals if you haven't touched it before. So while you do your DCA, you can read up more about technical analysis, and of course, understanding what the news and narratives are and how it affects the market also helps. So while you're doing DCA, you could practice identifying some of the narratives and understanding some of the sentiment that's going on in the news and social media. All right, and on a final note, if you are doing any form of trading, remember to always manage your risk. Right, practice on demo accounts before trading live, and of course, if all of this is too much information, stay tuned for a new feature called the Markets Toolbox, which will help you receive, which will help you set up the tools you need to operate in the markets safely, securely, and at the right time. All right. Again, and why are we doing all of this? We believe Bitcoin and crypto will be used by everyone around one day, and we are here to make crypto fun, easy, and rewarding for everyone. All right, so join me next Friday, midnight UTC. We live stream on Discord, and the session will also be recorded to share on our YouTube and Rumble channels. On these calls, we usually talk about how we can operate again safely and securely in crypto, and have information sharing like this session today. All right, again, thank you so much for your attention, and have a great day. Bye.